Hello and welcome to Weekly Open. I'm Brian. We got Don and Josh on the line. Before we get to them, let me tell you about FTX. Go to weeklyopen.com/FTX where you can trade today. Buy the dip if you feel so inclined. We'll see what Don has in store for us. He's our oracle of the range trade of 2022. You can trade with zero fees on FTX. All the chop is in your hands. Earn yield on your tokens too if you just don't want to deal with that. Do it all at FTX. weeklyopen.com/FTX. Thanks to them for being our partner. Let's get to the show. Don, how you doing?
Good. How are you?
I'm doing well. Josh, how's it going?
Don't sound so excited over there.
Do I sound sad and depressed? Is it leaking into my voice?
A little bit.
Oh, God. Must be close to the bottom then. I don't know. We need Don to tell us. Don, is the range trade on? Is it all over? Going to zero? What are we doing?
I mean, in general, I would say still the range is still in play. 60 to 30K is the range. Buy the extremes or sell the extremes. Anything between there, it's not as interesting. But I feel low time frames are actually shaping up to be quite a nice trade. I actually took one before the call. Bought a little bit. Yep. I can go over the low time frames in a second, but in general, what I've been watching has been is Bitcoin dumping more than the S&P? Is it dumping on its own? And what's been happening in the last few hours basically is that crypto actually Bitcoin had a little bit of a uptick while the S&P kept on dumping, which kind of made me think, okay, we're already quite extended, right? This move from 70K almost all the way to 40K basically was exactly a 40%, 40-ish something percent retrace, right? We've seen those so often during bull markets. Bounce that I just think it makes sense to bounce just based on the fact that a bunch of bigger guys in the market only really move whenever we retrace 40%, right? And they could obviously get run over if the S&P keeps on dumping. But I mean, just having that money on your side is kind of nice, right? A bunch of rich guys basically only really deploy when the market dumps by quite a bit. And this is pretty much the exact percentage that we've been doing over and over and over again. So I think timing wise is pretty nice for a bounce.
Hold on, Don. Why don't you use log charts?
I have it on not log chart because I actually wanted to show how badly Doge has dumped. That's why.
That's fair.
But yeah, I think we're going to see very likely we're going to see a bounce. But I don't think it's going to be trend reversing. And I think in general, the one thing that I'm reasonably certain about on the higher time frames is that we're going to go to 30K eventually. But I mean, that doesn't mean this is pretty much a straight line already. Having some sort of retracement would make a lot of sense. And then probably dump some more. But yeah, I see a lot of people aping out now. The market has dumped 40% and now people are starting to flip bearish, which doesn't really make much sense to me. If you've been bearish from 60K, targeting 30K, so be it. I think that's still valid on a high time frame basis. But if you're starting to flip now after been bullish the entire way down, doesn't really make much sense to me. And then on the lower time frames, the reasons why I actually think we could see a bounce is that I was looking for either a capitulation, a massive 10, 15, 20% drawdown that I could buy, or just some sideways, because like I said, this has been extended. The move has been quite extended. And then if we go sideways here for a while, I think you could get a counter trend move that then eventually gets faded, but I think could go up for a while. That's kind of my view. And then if you look at this, is basically what ticked me off to, okay, we're going to bounce. It's basically this relationship where you saw on the low time frames, right? Look at this. I don't know if anyone follows this at all, but I like to look at it. You see crypto dumped or Bitcoin dumped. And then the S&P dumped afterwards. or like in general, like the S&P dumped and Bitcoin didn't take the hit and just went up instead. And whenever that happens on the low time frames, you usually get like quite a sizable bounce, especially when like sentiment flips really hard, which we've had. So like that is like the moment we actually got like massive buying into like this candle, I was like, okay, I'm going to get into this as well. Just join in on the buying. That's what I've been kind of waiting for.
The cash that I had on hand, or the cash I had on hand that I'm allowed to spend, I was also buying there. I had already bought some that was too early last night, and I'd actually been working into a couple of different things that I'm curious to get y'all's thoughts on. One, I wanted to comment real quick. It would be interesting. Bitcoin's been doing this a lot. It's like basically an equivalent equal bottom type of thing. Usually I just don't believe in those, but man, it's been liking that, you know, like we did it back here, a bunch of wicks essentially to that same level. We did it here 1 and 1. And yeah, we kind of swept the daily close areas, but didn't really make new lows from the September version, and you know, failed this attempt at reversal. So this is like attempt number, what would you call this? Really attempt number 3. Not quite as capitulatory as the big one, but you know, certainly real. As I was trying to predict bottoms, I tried to find strength in the market. So I actually bought some Atom recently. Like I'm basically at break even after all this movement in the past couple of days. So it's not like I'm a genius or anything, because this is my price. I bought in the cluster, you know, I didn't buy like the smart capitulation. But we're seeing really weird, interesting rotations where like Cosmos ecosystem stuff is doing well. Like Near is going crazy right now. It's up 11% on the day. And then we're seeing some stuff like really, really lag. Like a lot of the ETH-based DeFi stuff that was ramping back up kind of ate crap. So I don't know, it's been a very strange dynamic. And also the ETH BTC pair like really has been struggling on this move too. So could we be seeing a dominance run? I guess is the summary of my point. Outside like of a couple of alts that are doing interesting things, like it really seems like Bitcoin's trying to establish itself to me. Yeah,
the funny thing is like I'm losing money on the ETH side on my NFTs, but I'm gaining money because like they're gaining in value in ETH, right? It's so fucking weird. Like the NFT stuff is weird because like you would think like ETH goes down, and ETH looks complete garbage to me now. On like both the Bitcoin pair and the USD pair, but I still have a bunch basically in NFTs. Mm-hmm. But those have actually been going up. Like I've been making money while the market's been nuking, because NFTs just in general been like a good trade. So not entirely sure what to do with that, other than like usually I would hedge the ETH that I have, but I feel like that's already quite late and I can't really short anyway. So I'm just sitting there taking it basically on the ETH front while making money on the NFT front. It's a really weird situation.
Yeah. I had an NFT trade recently where the collection that I was in was liquid. So I took a 3% haircut on the ETH relative trade because it just wasn't doing what I was expecting, while a bunch of other stuff was moving. So I took a 3% haircut on that, but I purchased the NFT like in December. So you know, ETH was like 4K something, and so I took this like massive haircut on the dollar trade that I didn't even actually realize was there. I was like, oh yeah, I'm break even on this, and then I saw it in dollar terms, and I was like, I'm the worst NFT trader alive.
It's such a weird space where it's like you have to like think about like around 5 corners. It's the same as like the old altcoin Bitcoin pairs, basically. Like when that used to be a thing, I feel like the NFTs kind of go the same way. Like you have to consider, okay, is ETH going up? Is it going down? Does it matter? Is like if ETH goes down, might the NFTs go up because people escape from ETH into NFTs? It's really interesting. I love like trading around it.
Yeah, I think it's fascinating that, like I was wrong. I mean, I was exposed still, but I was thinking metaverse stuff would kind of calm down, profile picture stuff would go to zero, and maybe some real art that had capitulated would do okay. And it's basically been the opposite, right? Like metaverse has just gone harder. Profile picture stuff has like not stopped mooning, and art driven stuff no one cares about.
Yep.
And I don't think I was making some horrible take that was different from NFT experts, you know? I don't think very many people were thinking, you know what, Bored Apes are just going to go insane and not going to stop. And then there's going to be a follow-on trade with all kinds of other, you know, JPEG-driven profile pictures, and they're all going to moon. And like, I don't think very many people were predicting that as like the NFT renaissance. And that's what happened. That's what's going on. Like the Bored Apes flipped punks and stayed there. Which is
very impressive.
Very impressive to stay there. Like I thought it flipped it the first time very temporarily, and then second time it's like, all right, we're gone. You know, and that's like some kind of 10 ETH or something divergence between the two. It's insane.
I mean, I think that's like a really good preview of what will happen if Bitcoin ever gets flipped by something. We talked about this before. Like the first flip is gonna be like whatever, and then the second flip is gonna be the important one. And I still think that's the case. Like if Bitcoin ever gets flipped once, whatever, if it gets flipped twice by the same thing, then we're in for wild times and a new leader.
Yeah.
What are we flipping?
Like what
is BTC flipping ETH? Is that what I'm hearing?
This is NFT flipping.
Yeah, I know. But NFTs are liquid nonsense. Okay, like come on, you can't take that seriously. We got insiders trading on stuff with tax, blah blah blah. Like
Josh, there is an 81 ETH global bid on Looks Rare, so this is a vampire attack on OpenSea.
Oh man, 81 ETH. Oh,
that's like
boy, oh boy, that's
any holder can jump into that.
Yeah,
it's a vampire attack on OpenSea, but they're essentially creating a collection wide order book, which is fascinating. It's a different way of bringing liquidity to NFTs, and I'm very curious how that plays out. But you call them illiquid, but honestly, the bigger you go, the more liquid they are on the profile picture side. Now, if you're talking like Fidenzas and stuff, they're very illiquid. But on the Bored Ape side, there is liquidity there. There is demand there if you capitulate fast enough. Sorry.
My point is, the more illiquid, the more concentrated, the less likely you are to get a true picture of. We'll use the word value in quotes. Okay.
So one other thing I was going to point out, we lost 200 day. We lost the level, like the 3333 kind of last level of, ledger's last stand. And then we entered
Pickett's charge.
Yeah, we entered what I called the doo-doo zone. We didn't run to the bottom of it. We haven't fully slept the lows. Keyboard Monkey told me he wanted to buy like 2,700, something like that. So I wonder if the sweep 3K round number, like if that is a sufficient piss everybody off type of bottom. What do y'all think about that?
I mean, what I'm looking for, and then I'll let Josh do it afterwards, but like I'm looking at this like setup for Head and Shoulders. I think that's like your best exit. Like if it goes back to 4K and you're still holding ETH.
Exit markets.
Yeah, I'm serious. Like if it gives you this is a gift. Yeah. Like if it goes to 4K, it's a huge gift that you should take advantage of. And I mean, like for the short side of like, you could even take a short trade, right? With like a stop loss above the high, entry at like 3.9, 4K. If it does bounce that far, and then target towards like 2K. I think like that's the trade. I'm gonna figure out how I can hedge my ETH if we go back to 4K. If not, it's just gonna be stuck in NFTs, and I just pray to God that they're gonna go up. But like for me, the ETH thing is pretty much the exact same as Bitcoin now, right? Like you saw Bitcoin, and I talked about this setup a lot back then. Like you saw Bitcoin rate the highs and then dump. And then start accelerating the moment it lost 60K. Same thing happened on ETH. If ETH is kinder than Bitcoin was, like Bitcoin didn't go to 60K straight away again, I think that's like the exit. That's kind of my view.
Well, ETH doesn't have the shoulder yet, like you said, but BTC definitely, arguably, You could see a shoulder there already, especially if you're looking at it on non-log on weekly. I noticed it, especially when you didn't have log on. But yeah, I mean, you can look at that and say it's not a head and shoulders now or whatever. But the point is, what are most people going to see there? They're going to see a head and shoulders, 100%. It's not about what you individually think it is. It's about what you think the collective hive mind thinks it is. Okay.
Success rate on head and shoulders in this market.
Let me finish. We had a head and shoulders from January to June, and it didn't play out, right? That invalidation criteria is the same as the current invalidation criteria. We get above 51, I think, whatever the right shoulder is. We get above that, and you can say with some degree of certainty, yeah, it's probably invalidated. But the current price action, you can't ignore that this is certainly not bullish. And I put out a video Sunday on my personal YouTube channel about discussing this very thing. Like, yes, we're in a range. Yes, the range is massive. Yes, we have tons of volume support from 30 to 40. Yes, it's a death cross. Like there are no reasons to be like failed experiment levels of bearish here, but it's tough for me to get bullish again on the long side with leverage, whatever, until we're back above that 50K level. Like we could just chop around from 30 to 40 in perpetuity forever, just be on this nasty ES correlation, whatever legacy market correlation. It just doesn't. Who wants to buy here is my question. I don't know. It's tough because there's just no strength. It's hard for me to buy weakness, even though we're down 42% from the top. Like we're still in the range. We still have a bunch of the range lows to explore. So the trend metrics certainly are not on your side for a long. I can tell you that much.
The trend metrics, not the chain metrics. Is that what you're saying?
Well, also the chain metrics. The chain metrics since November are also continuously pushing multi-month lows for the most part on BTC and ETH. I haven't checked the other chains that are looking better price-wise, but man, that's rough. And something else I said is that if you give this chart to somebody who's not in crypto and you don't show them the ticker, they're going to tell you, yeah, that's an M double top. Like if you zoom way out and put it on log, what are they going to see there? They're going to see a double top. They're not going to see pretty much anything else. And I don't know how else you could just think of that chart as being bullish. There's nothing, there's no redeeming qualities to that chart.
It looks bearish at the bottom, that's what I hear. I don't know.
People give me crap because they were like, oh, you were bullish at the top twice and now you're bearish at the bottom, just like you were in June. It's like, yeah, well, I mean, I'm bullish when I think it's bullish and bearish. I don't. What do you want me to do? This is a range. Like, if we break the range, it's going to get super ugly. That certainly isn't the expectation, but I do think the expectation is reasonable that we continue to explore the bottom side of the range.
Leisure, do you want me to trigger you? Look at this. Yeah, like if this head and shoulders plays out, right, and we go down and then we bounce, like look at that is such a scam.
Yeah,
this is like
it doesn't
imagine us like head and shouldering and then like that and then reversing and then creating this macro head and shoulders like
that would be so stupid. I mean,
everything needs to be a chart pattern, but it would be pretty funny.
That would be an hilarious chart, but I mean, I don't think it's gonna happen. But yeah,
I just think that chart pattern overall tends to be a bit of a scam. Like it's one of the lesser. It's there, it's real, but it's one of the lesser successful chart patterns, and I find it more powerful when it's invalidated than I do when it's confirmed, because it feels like it never reaches target when it's confirmed. But when it's invalidated, it like turbo moons the other way because...
Well, it's not even about reaching the target right now. It's about what does it look like to you? It's through the inkblot test. It should take you 4 seconds to figure out what this looks like.
Sure.
It's not bullish, like we'll start there. That's the first thing. It's just not bullish.
I feel like it's a pattern that's seeking downside liquidity. unless it's just a totally broken market. Maybe it's a totally broken market, but here's another thing. If it's not over, then we've had a 42% drawdown from the top, which is consistent with a completed, drawdown for Bitcoin historically, if not like total bear market, game over type of a situation. The hard part in any of this is determining, like, if it is game over, how do you get out? Like, at what point do you get out? If it's not game over, though, then we had a pretty completed correction that would indicate that there's potential upside from here. So I don't know, man. I'm kind of torn. Like, it might be all over, but I don't have confirmation of it. Like, it's easier to get confirmation of thinking it's all over when you have a blow off top followed by a cascade down that's like 60% of the price, and we haven't had that in Bitcoin, and I really don't even think we had it in Ethereum. I think I think in Ethereum, this was more of a rounded top with a failure as well. And I'm a little bit biased because it's complicated. You kind of need that 60% drawdown to determine, okay, I think it's over. And then you wait for the bounce and get out on the bounce. Are we in that stage now, right? Like, if we get the bounce, you get out on the bounce and you see perpetual weakness as liquidity exits the system. That could be possible. But what if this is like the bottom of the range and it's all some long consolidation? It's a little tricky to me to just say, like, okay, to your point, Don, like, this is where you get out and walk away forever. Or is it just kind of seasonal risk off stuff like we've talked about before, like what we expected might happen at the end of the year in January and then maybe again in April, and you kind of climb a wall of worry until everything's okay towards the end of the year?
I mean, it's really tough to say. That's why I'm like, just saying, okay, it's a range, much easier to kind of play with that framework and then be bullish above 46 towards the range high and be bearish while we're below 46. But like, going back to the head and shoulders is something I see people like do like different than I do, like all the time. Like, when I see a head and shoulders form, right? Like, it looks like this, right? When I see this, the trade that I take is from the shoulder to like the support, or maybe like through it a little bit, and then I close. I don't like target the like chart pattern target ever on the short side of things, because I think, like you said, usually it doesn't play out all the way.
It's like,
but like this, yeah, it's just like what happens basically is like no one expects the head and shoulders for some reason at the right shoulder, and then it's like people try to chase the head and shoulders basically at support and then trade through support, get euphoric, and then it reverses and liquidates them all. We're kind of at that point right now where I wouldn't, that's why I'm saying, like, if you're shorting here, I think you're an idiot. I think like legitimately it's completely stupid to short here, because what you're basically doing is like you're shorting into like a 40% retrace, you're shorting into like technical support-ish, and you're kind of like, you're easy pickings. If the S&P stops dumping, you're going to get picked off. Like, it's just how crypto works, right? So I think like shorting here is completely stupid. If anything, you want to be longing. But I still think like eventually we're going to go to 30K. That's kind of my view on that matter. And with regards to like, okay, where do you exit all markets? It's really tough to say. I'm glad I sold my Bitcoin at 60. And I'll enter again with like big size at 30. And if we start losing that, the way I would enter at 30 is basically, let's say we bounce here and then completely cascade towards like 30K. I would definitely buy that cascade, because then you probably get like a big bounce out of it. If we like bounce here into resistance and then bleed into 30K, there's no way I'm going to buy 30K. Because then I think we're going to see like a massive shakeout, and I want to be buying that shakeout instead. So it depends on how we get there. I would buy it, and then like if it shakes out and then goes sideways, that's where I'd be like, okay, I bought this, it's not going up, I'm selling, waiting for 30K to be reclaimed again. And
then like it's lose 20% maybe.
Yeah, but it's like let's say it shakes out below 26 or like into 26, goes sideways, you sell, like you bought at 29, you sell at 26 because you're like, okay, fuck this. And it goes back to 32. You don't really lose much. And like the chances of it going all the way back up to 45 are quite high in my view. So that's kind of like how I look at it. But if you're like a massive giga bull for Bitcoin, I think what you just do is like you buy 30K because it's like buying, at that point, it's like buying 6K, right? Like if it goes to 30K, it's like buying 6K. It's not the worst place to buy. It's like it went down 50%. Doesn't have to do that again, obviously. But in the long run, if you bought 6K, you're quite happy at 40K, right?
Yeah.
So it just depends on how you want to go about it.
So I think there's several. Don, you slayed 2018, 2019 bear market. Like people may not know that just because he does a lot of new people. But you were really good at being patient, using longer term charts. And I was good at essentially trying to like make something out of the smaller time frames, which is really good in a bull market, right? Because you're essentially front running dip buys in an uptrend or whatever. As the speed of something escalates. I think what we've probably done by completely failing to break out really after what that second new all-time high on Bitcoin looks so bad, like what's up there. Mm-hmm. From confirming the failure of that is probably when we entered a new realm where it's like, okay, you can still make money, but it's not going to be easy for you. You know what I mean? Versus it's just going to be significantly easier across the board, risk on appetites. And I think how do we approach this now is we're simultaneously saying it's probably not a good place to short, but it's also like you should maybe be euphoric if you get like 48K as a retest, you know? It's like we're kind of in this, that's what the chop, like the middle range for a whole year can do to you, right? Like you just have to be able to look at bigger things and figure out where does my risk appetite fit within all of this, and determine like what's my best way of maintaining buying power and potentially making money as well. And that's what you're trying to accomplish when all this is done. So looking at a weekly like this, it might be okay on the low time frame, like you're gonna feel bad either whatever, like getting liquidated or, you know, selling all your coins right now, and then it bounces to 48. And then your responses at that kind of level might be, oh, everything's fine now, I'm just going to keep holding. And then that's when you get 30. Or like you look at that and you say, my brain it tells me to risk off now. And like we're likely going to have to churn through 60K over a long period of time. So once we get back, if we get back to 48, that's when you risk off, according to kind of what we're talking about. And then you let the market prove itself, right? Like you're able to just wait and say, is it consolidating and like showing strength at the highs so that we might get price expiration and new run in Bitcoin? Or like, can I just be patient and did I risk out, not at the top of the trend? Like I didn't sell the Pico top, but I captured the majority of the trend. I waited until it kind of recovered. I risked off and then I see what happens. And it strikes me like between everything both of y'all are saying and I'm rambling about, maybe that's the play, right? Like you just let the market prove it after a short-term bounce.
No, bro, I want to be a hero. I'm going to inverse trade everybody. I'm going to be long here. Yeah, of course, you're correct. That's, of course, the most prudent thing to do is wait until the market says, yeah, things look okay again. 48.50 is the level on a lot of places, even higher if you want to be more conservative on stuff like the cloud. But let the 5,200 crisscross again. Like that may take 60 days, you know? What is everybody worried about rushing into stuff here? I don't understand.
I think it's because we were taught that like you can miss it, right? Like when everything is 3xing, 10xing, whatever, it's like if you miss the little dip, then it's like it moons without you. And what I'm trying to get across poorly is that maybe that stage of the market is over, and you have the ability to be a little more patient, and the market might reward patience better. Like just look at the market on Sundays when the new weekly candle prints, you know? Yeah.
I totally agree with that. I think like in general, like the cool thing is right now with like the chart looking like this, which is like the chart looks really shit, right? You look at this, it's like, it looks really bearish, but let's say this week just closes like it does look right now. And then we get like a strong upwards candle the next week, right? What happens basically, what you're doing is you're invalidating the head and shoulders people, right? Like they are shorting this breakdown. And you just invalidated them by getting back above the neckline. You also invalidate like the people that are like short because we're below the mid range. And then you have a bunch of people trying to get back in. And that's like an easy trade towards the next resistance, right? So like, even like, does it really matter losing out on these 10, 12, 15%? If you then can capture like a move of like 20%, that it's much, much more risk defined, basically. Like that's how you have to think about when the market is kind of like trading like this, because like Ledger said, this is a PvP market, in my opinion, right now. Like you are trading against your friends, against everyone you see on Twitter. It's not necessarily a market where you see like big, like inflows from other people that are new to the space, like we had with like the dog coins and everything. It's just basically us all kind of battling it out in the market.
Kill each other.
Yeah. And I mean, that is like, if you kind of think, okay, hey, I can trade better than Don can, or I can trade better than Ledger can, or like Josh, then I mean, go ahead, right? Try your hand. I'm not even like I'm personally like, I don't really mind sitting this out because I know that there's a bunch of people that can trade this better than I can. I just know like I can trade, like I have an edge if this should liquidate towards like support, or if this shows momentum, because I don't mind switching my stance. And I know exactly that if this goes back up towards like 47, 48 and starts closing above it, people are going to be like, yeah, I mean, it's a bounce in the bear market, whatever, disregarding that there's a whole bunch of people that need to get back in. And then you get like a nice move. Or like if it goes to range low, people are like, okay, this is really bearish. We've been testing the support so many times, right? 1 time, 2 times, maybe 3 times. And this is the 4th time. This is just going to break, but it's not going to, in my opinion. It's going to bounce at least a little bit. And I know that that's where I have my edge. So like those are the times where I get kind of like in the market, take advantage of it, and then you get back out on the bounce, right? Yeah. And I mean, you don't really need to do much more. If you're aiming for the skies in a market like this, you're probably not going to make money. It's just how it is.
Like I know deep in my body what the bear market felt like in 2018, 2019, you know, and therefore, after having success this time around or whatever, like I entered this whole side of things essentially trying to say like, okay, how do we preserve what we've gained and also figure out a way to maintain smart exposure? And even though I came into the year knowing that, I'm sitting here now and knowing that, I'm finding it very difficult to actually execute on that without essentially being in dollars across the board as much as possible with very short tenures in the market. So like exposure, I feel like with that mindset probably needs to be picked when it's short periods of time, when it's obvious. Because what I've found so far this year is like, trying to maintain like swing trade broad exposure is really hard. Like it's really easy to lose. Even though you know you're like not trying to have large expectations. What are y'all seeing in that front? Like, are you essentially preferring USD or what?
I mean, for me personally, yeah. Like I'm trading the NFTs around. That's been the market that has done the best for me during like the downswing. It's actually kind of weird because I felt like I was super late to that space. And I kind of was, but it's still like it's doing quite well. And USD, like that's been like my standpoint, just basically try to be based in USD, see how it goes. If there's any momentum, redeploy quickly. If there's not no reason to, right? And so far, like the thing is, like we haven't had any momentum, right? Like look at, even if you turn off all the lines, like since the high, like where's any momentum? Like you could argue like the 50K breakout, whatever, was like a little bit of it, but even that, right? It's tiny candles to the upside. You have like big candles to the downside, tiny candles to the upside. There was no momentum anywhere. And given we haven't had that, it's like I don't really need to be based in BTC. I can just be based in USD. So that's been how I've been doing it. I don't know how Josh's been handling it.
Yeah, I mean, I've tossed out the BTC early on the way down, held too much ETH on the way down, hoping ETH would do its own thing, but with ETH BTC looking like it does now, it's looking less likely. ETH BTC could course correct if the pumpamental narrative returns with proof of stake stuff. That's been the narrative for ETH is always the narrative for ETH is always that there's a narrative, and that really helps ETH against BTC, at least since 2018 or whatever. So ETH BTC could have a mind of its own again, but I don't see that in the near term. And we haven't mentioned rate hikes at all, but that's another thing that Legacy is probably pricing in, and because BTC is correlated with that, it's all part of the game. So I
heard a good podcast interview this weekend where they're talking about tapering versus actual QT. So the market's now pricing in, I think, 4 rate hikes, but we're technically still in QE. So there's still liquidity going into the market. So the taper that is being discussed is essentially tapering the liquidity that's being provided to the market. So buying less. Versus like actually tightening, and then tightening is not really planned until later. And their point was essentially that until it actually tightens, it's probably not like a great idea to say, oh yeah, I'm like fully risk off, because there's still being liquidity brought into the market. And the question is, to what degree does rotation happen to like go to value or whatever else, or like exit meme stocks, etc. And then for us in crypto, it's another derivative down. What are we? Are we a meme stock? Are we, trying to battle inflation? Are like altcoins the equivalent of growth stocks? How does that fit in? But I kind of liked what they talked about, because it's basically like, we could be doing rate hikes. We could eventually tighten, but for the moment, maybe have we already priced in the fact that we will tighten in the future, but we're still providing liquidity right now. And maybe that like is indicative of kind of a get the bounce, exit on the bounce, and then wait after that once like tightening starts up. You know what I mean?
I saw GS predicting 4 rate hikes after July, which sounds insane to me. So I don't think that's going to happen, but it's some rate hikes going to happen. That's inevitable, right? Inflation's 7%, 10%, whatever inflation actually is. They can't keep everything the way it is forever, I don't think, right? So I think people are coming to grips with that slowly.
Don, what's the Eurozone stance on inflation stuff?
I mean, it's probably the same as it is in the US. I actually don't follow the Euro stuff as much as the US stuff. Like I know like more than 10 times as much about the US stuff than about the Euro stuff. But I'm like, we have had inflation as well. So I'm like assuming it's just 1-to-1 the same thing. But I can't say.
I mean, I think it's definitely been a headwind. There was it Jim Bianco had a thread about how like bond markets essentially had an historically bad week last week. Did y'all see that?
Yeah.
And the comparative times were like the peak of the COVID crisis crash, the 2008 crash, like some really terrible times in the market, and that's what the bond market was indicating. And then and it was like, and then you compare it to the stock market, which while down on the week is not exactly overall in a mode of panic. And there, the question from that is, well, what the heck does that mean? Like, The bond market was kind of rationalizing, like down is okay, but the stock market is lagging theoretically. So I think we're in one of the most difficult times to determine what the heck is next since I've been an adult, and I think largely because I kind of got interested in markets really before the 2008 crash, but like my capacity to invest increased dramatically as I was working, which was on the tail end of the crash. So the stock market was at the lows, and this is the most kind of uncertain I've been since the volatility crash in January and February 2018. And that was extremely hard to trade back then. Like stocks just did this goofy down, like lower lows and higher highs, like expansion on both sides through the COVID crash. So I think we're in a very strange time.
Totally agree with that.
Not going to be easy to trade. I don't think it's going to be easy to trade at all.
No, which is why we forcing. Not we. I don't care what other people do, but I know I'm not going to be super active trading wise in this range. It just isn't for me.
Yeah, I think that's just makes sense. You don't want to get chopped up before it actually is certain where it's going to go. Like, because then, like, let's say you lose like 20, 30, 40, 50% of your portfolio while the market is really uncertain and it's like, you don't know where it's going to go. And then you have like a really clear view of what's going to happen. And then you have like almost no capital to deploy. That's like the shitty situations that you're in. If you're bored, basically like people sit around being bored and just forcing trades because they can't help themselves. Right. And I mean, it's like something that you get, like that happens during bull markets, right? That kind of attitude. Okay, I need to be in a trade constantly 24/7. That's the attitude that you have in bull markets. And that is the attitude that kills you in chop or in bear markets. Because if you're like in a trade nonstop, you're going to get fucked. Excuse my language. It's not going to be good for you. So like if you don't have the patience, it's something I would implore everyone to kind of work on it. Until it's up only again. And you're going to notice if it's up only again, like the people, once the market goes back into up only mode, it's going to be quite obvious, both from the charts and from the attitude of people. You just have to look around on social media right now to see that people are afraid and don't know like what's going to happen, where it's going to go. And in those conditions, usually chop.
I agree. I got another call at noon. I got to run, but don't force it. You know, if the setup isn't there for you, based on whatever parameter you've decided, don't feel like you're compelled to make a trade for sure.
We'll leave it there. Thanks everybody for joining us. Appreciate y'all. Go to weeklyopen.com to catch this episode and more. Go to weeklyopen.com/FTX if you would like to buy the dip or sell your coins, earn yield on your dollars, on your crypto assets, track your portfolio. You can do it all on FTX. weeklyopen.com/FTX. Thanks for being here. We'll catch you next time. Have a good one.